We're tracking China this morning internationally. China reportedly considering a $280 billion rescue package as the country's economy struggles to recover from pandemic losses. This is according to Bloomberg. Now, the package would be used to help stabilize the slumping Chinese equity market by purchasing stocks on the Hong Kong exchange. Now, what's interesting about this as well is that you've got some banks and some firms starting to name their top picks within the region, knowing that this inflow of stimulus and capital could lead more to investment opportunities as well. And if that does indeed play out, Morgan Stanley, JPM, some of their top internet picks in China could indeed be some of the winners within that alpha-driven investment strategy, continuing to offer good risk reward is what JP Morgan is talking about, and that was most recently in their mid-January note.
Yeah, and this also brings me back to a conversation I had at the end of last year, obviously before this latest announcement or this latest reporting has taken place, and before the latest data that we got out last week about the fact that the recovery continues to struggle so much. But I was talking with one of the analysts over at Barclays, Yang Zhao, and he was telling me that Alibaba, Pinduoduo, despite all the troubles that we're seeing over in China, that it is still among his top picks. Yeah. And he's making that case because if we do see any improvement, we're coming off of very attractive valuations. The fact that some of these companies have struggled now for some time, given the fact that the consumer in the home market has been so weak or has struggled now to really return from the pandemic lows, is a bullish case for some of these stocks. And we're seeing that reflected in some of these moves here this morning with Alibaba, which we just had up on the screen, JD.com, Baidu among the outperformers in today's market. So if we do see any sort of rescue here from Chinese officials, that could bode well. But remember, though, Brad, what Shahzad Kazi was telling us yesterday, and he was saying that even if we do see any sort of intervention, it's not necessarily going to live up to what investors are hoping to see. It's still going to fall a bit short. And because of that, he's saying we could be on a road for a little bit more challenging times ahead.
Yeah.